Hello and welcome to Paper Traders, a show where two average Joes try to put together a portfolio and see if they can't beat the market. Whole premise of our show is to use Zach's tools on Zachs.com, and for the point of this show, Danny and myself, your two co-hosts, are going to be going and using only Zach's free tools, while the guests that we bring in will be using any tools that Zach's has available to help educate our viewers and listeners, I should say, on what's the best way to go about picking stocks. Another quick thing about what we're doing here is we're making sure that we start at a fairly low price point. So Danny and I will be stuck between $5,000, and I think we'll just kind of take it from there.
Yeah, and I think it's a good thing to note that anybody can start with any amount of money that they have at their disposal. It could be $10,000, it could be $20,000. You could also go, low, but $2,000, maybe $1,000. It's just somewhere to get started with the stock market and get interested in it. That's the whole kind of premise of this show. We want to, kind of bring it to the everyday investor and kind of get people interested in the stock market. So we'll see how it goes,
So now to go and bring in our first official guest here on Paper Traders, Kevin Matras. He is the Executive Vice President here at Zachs.com. He's the editor of Options Trader. He's also the author of Finding Number One Stocks. He's also a trader. Kevin, welcome to our inaugural show.
Thank you. Good to be here. By the way, I'm sure everybody has seen the intro, and when I first walked in, I thought you were Betsy Ross, and I thought Danny was Jack Sparrow. Danny, you took your hat off, so all of the visitors are not going to be able to see what I saw walking in here. So me, Betsy, and Jack, fantastic.
That's a great way to start. Yeah, I felt a little silly wearing the hat, so I thought, I should probably take it off. That was just my thought. But Eric went along with it. I like it. It's looking pretty good.
Fan of the hat.
All in the idea is staying in the timepiece.
Fair enough.
And with the open especially.
Good.
So to start things off here, Kevin, why don't you tell us a little bit about what you do here at Zach's and what you've got going on?
Nobody really wants to hear my biography, but I am the executive vice president at Zachs.com, and I pretty much am in charge of all of the different trading services and everything that happens on our website. So, end of biography.
Okay, we're keeping it short and sweet. I like it.
Right. And you wrote a book.
All around good guy.
And you wrote a book.
Yes.
You tell us that it is hands down the best book to read to get started.
All humility aside, it is probably one of the best investment books you will ever read in your life. It literally distills 25 years of everything I have ever learned in trading, and I have traded virtually everything out there. It is a phenomenal book. Get it. It's called Finding Number One Stocks. You will not be disappointed.
I'm sure it's available on Zachs.com.
Yes, it is.
And
Amazon and everywhere else.
And actually, don't you get it if you purchase a program through Zachs?
Yeah, we do have the home study course. You can get that. You can get the book for free if you buy the home study course. The home study course is a 5 DVD. Now they're electronic DVDs, but it is a 5 course DVD set. That's about 3.5. Actually, it's probably about 5 hours of instruction on how to become a better trader. But again, you can also just get the book on your own if you decide to buy it. But a lot of different ways to get access to it.
For those who write us here at Paper Traders, we'll get you a signed copy via Kevin Matras
Boom.
if you order one. I guess that's
maybe
such a great
Betsy
idea.
Ross and Jack Sparrow will sign it as well.
Yeah,
We
we'll
will
even get our own
definitely
photos.
sign it.
We'll even get our own photos signed for you guys.
Yeah, we'll go and get some profile shots.
Good.
We'll start sending those out. All right, Kevin, so you've been doing this for 25 years. How did you get started trading stocks before you became the god here at Zachs?
I started when I was very young, but I first started trading commodities. And it was interesting because when you take a look at the risk in futures, I would consider the risk in futures to be akin to the plague, whereas you take a look at the risk in stocks, and I would consider that to be more like the common cold. So this was a trial by fire. And if you could figure out how to trade a little known product, now again, commodities is a multi-billion trillion dollar industry, but way more people know about stocks than they do about commodities. But I learned how to trade by trading commodities. Then I ended up getting into options, and then I ultimately gravitated into stocks. But it's been a fantastic journey.
So your first stock trade, how much was it for?
My first stock trade.
And who'd you buy, if you remember?
I'm trying to remember. I believe it was EPD, I think that was Enterprise Products something. And I think I probably put, I don't know, $1,000 into it, whatever. Okay. So yeah, that was my first thing. There was nothing remarkable about that trade,
Very
other
modest.
than it was my first one. And yeah, that you got to start somewhere, right?
Exactly. And that's the whole point of
that's
this
what it
show.
was, right? It was funny because I didn't expect you to ask me that, but EPD sticks out in my mind, and I could probably be 90 years old and somebody could ask me what my first trade was, and I'm sure EPD is
The first thing in mind.
going to come to my mind.
Well, that's awesome. And so here is actually also do options trader.
Yes.
Now, options trader and options and things of that nature, we're going to get into further down the line as we go through our show here. Obviously, this being our first one, we don't want to just jump right in with the big stuff. So options, if you could just give us a small synopsis of what options trader is about.
I know we're going to be doing a show on options in the future, so I'll save all of the definitions and
Yeah,
stuff.
for sure.
But the reason why I like options, and again, I do a lot of stocks too, I would say probably maybe about 15-20% of my portfolio is options. But the reason why I like options is because you can put in a relatively small amount of money and you can make massive returns. I don't want to get into the weeds, but some of the things that I like to do when I am trading options is I like trading bull call spreads. So one of the things that I will typically do when trading a bull call spread, I usually like putting on bull call spreads on relatively high price stocks. And I usually am looking for $10 or $15 or $20 wide spreads. But if I'm looking at a $10 wide spread, I will usually try to put that on for, let's say, $300 or $400. For people who understand options, they probably realize that means I will be able to make anywhere from $600 or $700 profit. The point of this story is, small amount of money, I can make over 100 to 150% return. But usually you only need to see maybe a 5 or a 10% increase in the underlying stock in order to make a 100 or 150 or maybe even a 200% return. So that is one of the reasons why I like it. You can get a lot of leverage, but again, you can start with a relatively small amount of money. Now, granted, if you buy one option for $300, yes, you could lose the $300. If you buy $10,000 worth of $300 options, you could lose all $10,000. Right. So you have to be very, very careful in how you allocate your resources. But very quickly, that is the illustration of the kinds of leverage you can get with options. And if you know what you're doing, they can be very profitable for you.
So to summarize that, I had heard one time, you can tell me whether I'm right or wrong on this, that options essentially are betting whether or not a company is going to do better or worse of where they're currently standing with their stock price based on a time frame out. Right?
Yeah, I mean, basically, the bet is the same as a stock in a sense. But if let's say you have a long position, you're bullish, or let's say you have a short position, you're bearish.
Right.
Yes, if you're bullish, you're expecting or you want the stock to make a certain move upwards, but the only limitation with when you're doing that kind of basic trade is it has to make a specific move within a certain amount of time. So if you're in a stock and the stock goes sideways for months and even years, fine. I mean, it's dead money, but that stock can still go up and you can profit from it. If you bought, let's say, a 3-month option or a 4-month option or a 6-month option, whatever, you have that amount of time to see the stock move up to or beyond your strike price. And if it doesn't do it within that certain amount of time, all of that money is lost.
Womp, womp.
So those are other factors. It has to happen soon.
Right. And I know we're not going to go too far into options, but is this something I would probably, I don't want to say that it's riskier, but I mean, is it have more risk doing options, or is it a little bit more safe with, less money on the table?
I mean, it's safer in a sense that if you put in a specific amount of money, you are willing and able to lose. You have limited your losses to that specific amount. But again, since there are more ways to lose with options than there are with stocks, then I would consider it to be a higher risk in the sense that you need more variables to work in your favor. But again, the whole idea, if you're employing limited risk strategies, you've limited your risk, the amount of money you can lose to a specific amount. That's why it's absolutely key to be able to understand how you're allocating your resources when you're doing options. So again, if it's like, I can't lose more than $1,000, don't
do it.
put in more than $1,000. And people have this fantasy, I'm going to buy $10,000 worth of this option.
Right.
And if it goes down to $1,000, then I'll get out and I'll lose only $1,000. I'll get my $9,000 back. One thing I've noticed is that, if a stock were to make a significant move against you, that option is going to get destroyed in a hurry.
Right.
Then you have to see the market make a Herculean rebound and then some in order to get that money back because of all of the time value that you've lost. So I don't want to get into the weeds. We'll talk about that later.
It sounds
In
exciting.
short, high risk, high reward.
Yes.
bit, yeah.
Limited risk if you're using limited risk strategies. Again, I think that the options have a very important place in everybody's portfolio, but you do have to know what you're doing. But if you do, fantastic vehicle.
And we will get back into that for sure once we
right.
get you back in
Now
here.
you got me talking about it.
I know you're all
Stop,
excited.
but-
I can
but
see you. Yeah, but that's the whole point,
Right.
Well, they're going to have to tune in for the options
La
trade episode.
Passion.
And
There we go.
they're going to get all the information they need to know, and they'll be able to put on some awesome option trades. It'd be
Fantastic.
nice if I could talk, but yes.
Come on, Jack.
Yeah, we will eventually go and get those involved in our portfolios as well too, based on what we learn, etc. Now to get kind of into the general discussion of things, so we can kind of start getting into what we're going to be doing down the line here. So as we had said at the beginning, Danny and myself are going to be putting together two portfolios. We may both buy into the same stock. We may not. So our portfolios will
Oh,
be
hang on.
separate.
I thought this was one portfolio that you guys were both going to
Nope.
manage together.
This is going to be a
Okay.
kind of
Yeah.
a battle royale to see
Fair
who
enough.
can
Right.
either
Fair
do
enough.
the best or the worst.
Right.
You never know.
So
Little
it's
friendly
even better then.
competition.
Yeah, friendly.
So how much you guys starting with, though?
We're both starting with $1,000 a piece.
How much?
$5,000 a piece.
5,000.
5,000.
Okay.
Right.
5,000, yep.
That we've kind of thought that that's a small risk for most people, and that would be a good way for just about anybody to get into the market. As Danny had said off the top, you could get in with any amount. You said your first trade was $1,000.
Yeah.
It's all possible, but we just thought to kind of illustrate how to do so fairly easily, we'd just start with 5,000.
Right. Let me say too, though, since you're probably going to get a bunch of beginning investors, tuning into this.
Oh yeah.
Like Danny said, any amount is a good amount because most people in their lifetimes are not going to get rich through their vocation. Most people are not going to make millions and millions of dollars annually through their job.
We wish.
The
right.
only way you're going to be able to do it is by making investments, and equities is one of the best ways to do it. And I would also say too, though, whether you're doing a taxable account or a retirement account, I would tell you to fund your retirement account first. Granted, you do have to realize, okay, if I'm going to put this into a 401k or an IRA, just know you're going to have to, be good with keeping it in there until you're an old man.
Right.
If you're putting it into a taxable account, it's liquid. A qualified account is liquid too, but you're going to pay penalties if you take it out early.
Early, right.
But the point of the story is put it into a qualified account first because you get the benefit of being able to see that money grow without the burden of taxes on this every single year. So whether it's a pre-tax qualified account or a post-tax qualified account, being able to see your account grow without those taxes being taken out every year is a spectacular thing, and you really, over the course of a lifetime, can amass a fortune.
Well, that is a great bit of advice to start with, considering we're talking about how to start out. So you're actually giving somebody even more information that we were even thinking we should probably have to give people. You're really kind of laying it out. That fund your retirement first.
Yes.
Then
do
get
that.
into this.
Right.
It's all about the future.
Yeah. It's really good advice there.
By the way, I don't know if you guys, because if you're going to be starting with 5 each,
Right.
So I guess we'll talk about how many stocks you're going to be getting into, but it's worth saying here that you don't want to just buy one or two stocks.
Right.
You want to buy at least a handful. I would say 3 at the very least. 5 would be better. 10 would be even better still. And I remember reading somewhere a while ago, they said that 13 stocks is where you will see the ideal amount of diversification. So whether that's true or not, I think it's a good baseline. So I would say 10 or 15 is what you want to shoot for.
But lucky 13's the
But
number.
yeah, lucky 13. But you want to shoot for more because you don't want to have too much money into too few stocks. Because if you get crushed on one of your stocks,
or
you're
that
going to ruin your portfolio.
Or that one part of the market goes down.
Correct.
Semiconductors get blown out. People aren't buying semis. Then you're kind of SOL if you're all stocked up on semis and nothing else.
Right.
But,
and again, equal dollar weighted as well. So some people may think, oh, yeah, I got 10 stocks and I got 60% of my portfolio in this one stock and I got a bunch of tiny little percentages in these other stocks. An equal dollar weighted portfolio is also a very important thing to do as well. Because again, if you get absolutely crushed on one of your huge stocks that you have too much money in, you've just set yourself back tremendously.
Yeah,
So,
and that's a perfect segue because I kind of want to talk about what type of investors I guess there are, and is there a way that we might want to tend to lean towards? Now, I'm looking at the Zacks.com website, and it seems to have a lot of different investor services from ETF, home run, you have income, which tends to probably look for like dividends and stuff, I would imagine. Stocks under 10, so a little bit cheaper stocks. Maybe you can buy a little bit more.
These are also paid services that Zacks offers that Danny's going through, by the way.
Correct. But I'm just kind of curious, is there a certain type of strategy we should lean towards as beginning investors, or being diversified throughout kind of all the different strategies? Is that a better way of going about it?
Well, because you have the 4 types of investors. You have value, growth, and income, momentum investors. Myself, I'm not actually sure which route I'm going to take in this one. I feel like myself, I'm going to be playing around between all of them.
Right. That's kind of how I feel. I didn't know, is there a specific way we should be kind of leaning towards, since there are so many different...
And for these other people listening, if we could kind of like touch on just shortly on which each one is and those types of people and what they kind of look for.
Well, I mean, if you don't know what kind of investor you are, then you may want to spread your money out over stocks that, are representative of all of the different trading styles. But you can ask yourself some questions like, what are you investing for? Are you investing for fun? Are you putting your money away for retirement? Is this for maybe kids' education or something like that? So decide what this money is for. But also, too, I bet instinctively you probably know what kind of stocks you want to gravitate towards. In other words, are you looking for big, high flyers, companies with
that jump out in the middle of
nowhere,
growth go up $100 overnight?
Right. So if you're looking for stocks that are in the news and that are just going up day after day over and over, you're probably a momentum trader or a growth trader.
There we go.
If you're looking for stocks, let's say, that are considered to be undervalued, right? You have your typical PE ratio or price to sales ratio, and they're trading at a very low multiple. Maybe those are the kinds of stocks you're gravitating towards, something that you believe is undervalued or overlooked or ignored for some reason, and you believe that one of these days the market is going to wake up and it's going to skyrocket, or it's going to at least move, and you're going to be in at that discounted price.
Right.
Some investors, they're into dividend-paying stocks. They're older. They're not looking for any kind of fast action.
It needs to be like REITs, right?
Yeah, you can do REITs, but there's lots of older companies that are generating huge amounts of cash. They may not have the kinds of spectacular growth rates that they had when they were younger companies or that other younger, smaller companies have, but they're still doing fantastic. But instead, they are paying their investors back through the form of a dividend. And a lot of older investors appreciate having that dividend paid out to them. So, value is one of the key trading styles. And again, that person is looking for stocks that are trading at very good values. Not necessarily cheap in price, just somehow they have been overlooked by the market.
And
they are undervalued, and they want to get in before the market discovers this and sends it higher.
Up, right.
again, aggressive growth. These are the companies that are growing very, very fast. Usually, those are smaller and smaller cap companies, younger companies. But the investor is thinking, hey, this is when they're really going to be making their mark, and they want to get in. But there is a note, because value investor is looking for undervalued stocks. A growth investor, aggressive growth, he's probably going to be paying a higher multiple for that. But the growth investor is willing to pay that higher multiple because he believes that if it keeps on growing this fast, that company is only going to be worth more and more, and the multiples are going to get higher and higher. Right. And he's willing to trade that risk in because he believes this is the time for this market or for this stock to really grow. Momentum investors, that those are stocks that are trading in a trend. What's that old physics example? A stock or a thing in motion has a tendency of staying in motion.
Right.
Or the trader's adage, right? The trend is your friend.
Yep.
So yeah, you're hoping that the momentum that is already behind that stock is going to continue to carry it in that direction. So if you don't know where you are, you can put your money into each one of those kinds of stocks. But I would challenge everybody, if they sat down and they just kind of thought about the stocks they would like to be in, they would probably know. And then they can start slow and put their money into those kinds of stocks. Now, I will say this. If you do put your money into an aggressive growth stock because you think that is who you are as an investor, and then you find yourself losing sleep at night, right?
Checking your portfolio
freaking out,
every
yeah.
day.
And it's like, oh my God, what's happening?
You're taking Xanax to keep your
Get
nerves
out
down.
of it, because you may realize that it's really not in alignment with who you really are as a trader. So there is going to be a learning and a discovery process at the beginning, but these are all things you have to get past when you start.
And that's why I say, welcome to paper trading. Yeah. That's exactly what we're here to teach you, folks. All right.
By the way, I got to ask you, are you putting real money into this stuff, or is it just paper? You are.
Well, we do have to disclose whether or not we do actually own any of these stocks
got it.
ourselves. So no, this will be, as it says, paper traders. This is a fake portfolio.
What I will tell some people, though, out there who are doing it for the very first time, whether they're doing it on paper, whatever, I would say once you do have the certain amount of speculative risk capital that you are willing to get started with, I would tell them to put real money in the market, because when you're making money on fake money, or when you're losing money on fake money, your emotions are completely different.
Totally agree.
So even if you're losing $10, $20, right? I'm managing tens and tens of dollars.
Right.
Even if you're losing that a little bit of money, that small amount of money, you're gonna quickly find what your tolerance is for
how much money you
risk.
can lose.
Yeah. So the sooner you get started in a real environment.
Well, and that's the reason we also encourage anybody who's also trying to get into this in the first place, do a paper trade account.
Yeah.
Try it
figure it
first.
out.
Paper trading is a good place.
Right. Before you start just tossing money in and you start realizing, oh my God, I really stink at this.
Right. But don't paper trade forever.
Right. Exactly.
Paper trade for a while.
Right.
Then get into
until you
it.
start feeling yourself out, and what you, like you said, until you can figure out what your risk is.
Right.
Right.
Yeah, figure out what type of trader you are. It sounds like it's a very learning experience becoming a trader or an investor in the beginning. You're kind of feeling your way through, I guess, the information and all that stuff that gets thrown at you, because it can be a lot.
Sure.
I feel like. So I don't know. I think this might be a good time to kind of throw our stocks at Kevin and kind of see.
Well, actually, I have one more quick question.
Let me tell you though, when people think, oh, this is a learning experience,
right.
They just think of drudgery. They think of school. They think about how terrible it is. This is absolutely it's fun.
It's exciting to make money.
It's fun learning about this, because your end game is to try to build wealth. And honestly, this sounds goofy, but you would really have to try hard to screw this up. I mean, there are plenty of experts out there. Right. There's plenty of fantastic information.
Plenty of tools?
Yes.
Like Research Wizard, for example, that you manage?
Adhere to just some basic, proven, profitable stock picking techniques, you can amass a fortune over your lifetime. Don't try to get rich quick because you're probably not going to do that.
What's that term about timing the market they always use?
Yeah, I don't know what you're saying, but yeah, there is
There's a phrase there somewhere.
Right, there's some saying
Only a
out
fool
there.
times the market or something.
Yeah. But yeah, don't go in there thinking I'm gonna make $1 million. I'm gonna quit my job.
Right.
No, I'm gonna go in here. I want to make smart decisions. I want to be able to at least shoot for market returns, if not better. Right? You gotta walk before you run. But over time, which should be your horizon, over time, you can really build something special.
Okay.
So,
one quick question before we get to the stock picks that we're going to start adding potentially. In terms of getting started, what would you say would be better to try to fight the institutional investor, meaning the big guys out there? Would it be better for an investor who's just starting out, who does decide to start putting money in the market, to put it in with a larger brokerage firm, like a Zacks Management, for example? Or would it be better to go and get like an E-Trade account and start trading that way first?
First off, you're never going to fight the institutional investor, so just strip that from your mind. You actually want the institutional investor to help you out. I mean, just as an aside, institutional investors probably make up about 70% of the volume in stocks.
Right.
And it is the institutional investors who typically have the ability of driving prices. So ideally, you want to be in a stock that institutions ultimately are they like
a
that
Disney,
they are buying,
Amazon,
right?
Blue chips.
But yeah, so we're actually, as an investor, don't think of it as a struggle or a fight with anybody. You want to get into good stocks, and if you're picking a good stock, more than likely the institutions are also picking that stock, and with their hundreds of millions, if not billions of dollars going into the market, that is something that is only going to benefit the individual investor, because if you're in and those institutional types are starting to add to their position, moving the stock higher, you're only going to benefit from that. But anyways, getting to your thing, I think nowadays any kind of discount brokerage firm is fine. You had said Zacks Investment Management.
Right.
That is a wealth management group, and they will manage money for you.
Correct.
But if you're just a regular guy who wants to open up an account and pick stocks on his own with a small amount of money, $5,000 in this example, just open up any kind of discount brokerage house. I mean, I would say Zacks Trade is a great brokerage that you could use, but you can use anybody, and it's cheap. They usually have great tools. They have customer support if you need help. Think about what you want to do. So I trade, and I do all of my trading on a mobile device. I don't think I have made a trade on my PC in probably 5 or 6 years.
Well, that's got to be the new trend now, too, in general.
Now, some people, they don't want to trade on their mobile phone, right? There's a lot of these online brokerage firms. They do have great tools, and I think a lot of these tools are best utilized on a PC, so you can get a bigger picture
of everything.
But as far as actually executing a trade, I don't think I have made a trade on a PC. All of my trades, and I'm pretty active, all of my trades have been on a mobile device. But again, discount brokerage, that's all you need. You're paying anywhere from $1, $3, $5. I mean, that's the best way to go.
Perfect. Glad I asked.
Yeah.
Okay, so now we're going to get into the meat and potatoes of what this show is about.
Okay.
We are going to put Kevin Matras here on the spot to give us his immediate gut reaction
I've been waiting for this.
to stocks that he doesn't know that we've picked.
Okay.
So he is coming in completely blind, folks. He has no idea what we're throwing at him.
Apple.
Oh, yeah. Right.
I never heard of that.
Actually, I heard Apple's kind of a bad bet now. Something about their new technology is being owned by some other smaller company. So that smaller company supposedly is going to grow bigger than Apple. I just read that today in some article.
I have not read that, but I will
I'll
go
send
check
it
it
to
out.
you.
I will check it out.
So, Danny, why don't you start us off here?
All right. Well, my pick is Square Inc. SQ. I kind of gravitated towards it just because I thought financials is a great way to kind of get into it, but I didn't want to do the traditional kind of sense. So I saw that they're a little bit more of, I guess, like fintech, you would call it.
Okay.
They kind of help businesses start from the ground up. So they're not just helping with like credit cards and making the transactions for the business, but they're doing loans and stuff to help from the ground up. So I thought that was a really interesting company to kind of start with. They're Zacks ranked number 2. So I thought, hey, you guys are at least recommending them with the earnings estimates. So
Those style scores, though.
the style scores are not the greatest, but it has a B of growth. So that is a positive. Like you said, we have to kind of feel our way out to see what kind of trader we are. I did see this has been on a little bit of a rip and tear over the past, I'd say, since a couple months.
Looks like
says
June.
Yeah, it was down in the 60s and has skyrocketed to about 82. It's not really on its 52-week high, so I thought it might be a decent time to buy it and kind of ride the growth if it's going to keep on going. So I didn't know if you had any kind of, I don't know, nitpicks or things that you would say, hey, don't buy or should I buy it? I mean, it's looking pretty good in my hindsight.
All right, Square. I mean, I know the company, but I literally have never even really looked at the stock. So
Okay.
the first thing I did, you said Square, you gave me the ticker, boom, here it is. Yes, it is a Zacks rank of a 2. It is unfortunate that they have an F for a value score, which means of all of the Zacks rank number 2s, it's in the bottom 20th percent of all of those number 2s with the worst valuations. The growth is good, so it's a B. That's fantastic. But again, momentum is also terrible. By the way, the momentum score, while it does look a little bit at price, our momentum score is actually taking a look at earnings momentum more so than price. So sometimes if you see a stock going up and you see the momentum, let's say has an F, and you're like, I don't get it. Well,
Right,
how
why?
come this? It's looking at earnings momentum. So you need to keep that in mind. And then I look at the VGM score, which is a weighted average of all of those 3, and that is a D. So I'm going to look at the chart in a moment. But the first thing I would say is
You seem a little weary.
well,
a little bit.
I mean, there's 220 number 1s. There's about 660 number 2s. So you get about 900 stocks
Which, again,
out
you can
there.
sort through for free on
Sure,
Zacks.com.
you could do all of that stuff. But here you have almost 1,000 stocks. And why would I want to pick a stock that is a Zacks rank of a 1 or a 2 that has a score of a D? Why wouldn't I want to put the odds in my favor, especially if this is my inaugural stock? Why wouldn't I want to put the odds in my favor and try to find one with a style score of A? Because that's going to give me an even better chance of making money. Now, I will say...
So this is that risk aversion you were kind of talking about earlier, looking at kind of the scores here and taking into account kind of where it could be heading, I guess?
Well, I mean, think about this. This is all about probabilities. How am I going to put the probabilities in my favor that this trade, I'm going to come out on the winning side of it? So, I take a look at the industry rank, for example.
Right.
This is cool. It says top 25%, right? I'm pointing to it right now. Top 25%. So studies have shown that stocks in the top 50% of Zacks industry rank outperform the bottom industry rank, Zacks industry rank, by a factor of 2 to 1. So I have a significantly higher chance of making money if I'm buying a stock in a top rated industry. So kudos to you for looking that it has a Zacks rank of 2. Cool. It has an industry rank, top 25%, so it's obviously within the top 50%. So you do have those 2 things in your favor. But again, if I had 3 things in my favor, 3 things in my favor would be better than 2 things in my favor. So I'm not saying this is a crummy pick. I'm just saying it's fine enough for now.
Right.
But there's other things that you can do to try to find something better. So now I'm going down further. This is interesting. It looks like they're going to be reporting earnings on August 1st. And I see that their earnings ESP is 5.31%. So this shows, at least at this early stage, that there is a high probability that Square is going to produce a positive surprise. And if they did positively surprise, there's probably a likelihood that the stock is going to run up because of it. But either way, this is what I'm seeing so far. So I can continue to go into the weeds. So
No.
I'm not destroying Square. I think it may look fine, but I'm just saying there's other things you could do. But let me just look at the chart real quick.
Yeah,
Let me
for
just
sure.
see it.
Yeah, the whole
go to
point is getting your gut
interactive.
reaction when you're looking
Okay.
at it.
Yeah, it almost sounds like
At least he
it
didn't
might.
give me a 5
Yeah, no,
with an F.
I don't think
don't
I
worry.
want
Because I'd walk out of here.
I'm sure at a certain point we're going to come up with stuff that you're not going to like, but that's the whole point here.
So I see this stock. This stock is, it really has been exploding higher in the last couple of months.
Yeah, and it's still off that 52-week high, I think, of around $100. So I thought maybe it had some room to run, and like you said, it has the earnings, but I didn't know how much dependency it has on those.
Yeah, let me go.
So it kind of sounds like this might be a bit of a stock that, if we were to add it, might be good at a lower allocation to what I have available with the 5,000, just because it sounds a little bit riskier. Just with it being more of a growth stock than anything.
Yeah. By the way, I am saying that the stock. What was this? This was back in. Hang on, I'm trying to move this thing.
No worries.
Yeah. Well, I guess that was in 2018. I mean, I did see the stock
Had a mess.
go. It went from $100, then it collapsed all the way down to $50. Just imagine though, being that guy that bought at 100 and
then
it goes
drops,
down to
yeah.
50. So you just lost 50% of your portfolio. By the way, that's another reason why you always want to make sure that you don't put too much money into one thing. But either way, I think this looks fine enough. Again, it's a Zacks rank of a number 2, so obviously something good is happening with its earnings estimate revisions. So this definitely will remain as a viable candidate. So give me another one.
All right, Danny, why don't you give me your two? Because I got two that kind of relate to each other.
You want my other one?
Yeah, let's do your other one, and then we'll come over to mine.
My other one was pretty kind of straightforward for me, just because I wanted to kind of keep with the Warren Buffett idea. Again, being a new investor, kind of wanted to keep it simple. So I went with a golfing company. I'm a huge golfer. And I went with ELY, which is company Calloway Golf. Again, I just really like the company. I'm a golfer. I am an advocate for this company. I use their clubs. I mean, we kind of have that new Tiger Wave back.
I'm glad you didn't pick Tesla. I could just hear you talking about it. I
Tesla,
drive a Tesla.
I love Tesla.
I love a Tesla.
But I love golf more, and it's a strong buy, number 1. It doesn't have the best style scores, and it's been kind of stuck in a trading range lately. It hasn't really been moving too much. Again, it had a jump in around June, back when Square had a jump. Might have been a kind of a market-wide thing that was going on in that time period. But yeah, I thought it would be a good small allocation for something I wasn't too familiar with, but I knew because I liked the company, and it seems like they're doing really well with earnings. Again, it's a strong buy. So, any kind of small thoughts on this one? Is it just kind of something that you're aware of?
Yeah, let me give you something on Callaway for a moment, but one more thing on Square. So
Nope, he's going back.
I just
going
logged in, and I wanted to get to the snapshot report and some of the other stuff.
Okay, cool.
So if you're on my computer,
Yep.
You see these colored lines here? So these colored lines are showing you the trajectory of the earnings estimates and the revisions. So you can see that each year, this is 2019, the one I'm on right now, 2020 is the one above it, and then you've got 2021 above there. So the estimates in and of themselves are higher sequentially year after year, but when I take a look at 2021, you can see this brown line. This brown line is actually starting to come down. Now, granted, much higher than 2020, but it shows that analysts are starting to trim their estimates for the company, and usually when earnings estimates go up, prices go up. If earnings estimates go down, prices go down. So the mere fact that it's starting to head lower would at least make me want to look into this company more. Why is this happening?
Down.
Okay.
Then another aside, when I take a look at the valuations, now I see why the valuation was so crummy. PE ratio is 100. Doesn't mean it's terrible.
Oof.
I mean, Amazon used to be over 4 digits, but so I see the PE, that's pretty big. The industry, is pretty large as well. The industry has a PE of 64. But one thing about price to sales is my favorite valuation metric. I've done numerous studies with the price to sales ratio, but my studies have shown that once you get into a price to sales ratio of over 4, there is a higher tendency for those stocks to underperform. I've bought stocks with price to sales ratios over 4, so I'm not saying I wouldn't do it.
But you gotta be a little more risky.
But again, I know that the odds are in my favor if it's 1 or 2, and I got better odds if it's under 4. This is twice as high as what I typically am willing to accept. So these are all things that make me pause a little bit before I would actually do it. Anyways, give me your golf stock, Danny.
ELY.
It was ELY. It's Calloway Golf.
So ELY.
Right. And
I am a golfer.
Okay,
I am
so-
a terrible
Really?
golfer.
I didn't know you golfed.
You don't
That's
have to
something
be
new I
good
learned.
to enjoy it.
I am a terrible golfer, but normally I can have like maybe 1 or 2 great holes, and it keeps me going back. But I am not good.
I think that's the
by
whole
any
idea
stretch
between
of the imagination.
Yeah, I think that's the whole idea between golf and
Right.
most other sports that way. As long as you get one good shot in,
Sure.
you're like, oh man, I got to do that
I'm
again.
gonna do it.
Yeah, it feels so good.
Yeah, I went over the weekend and I played absolutely horrible, but I had, like you said, I had 2 good holes. I did okay.
Sure.
And it made up for the whole round. I was like, you know what? I did good. I can get over this. I had my beer.
You redeemed yourself.
Well, you fantasize one of these days I'm going to string 18 spectacular holes
One of these
together.
days.
It's
Right.
never going to happen,
No.
but that's the fantasy.
Yep.
And it would be no surprise to anybody here. I don't really play golf. I play disc golf.
Hey, disc golf is still golf.
Betsy, I can't believe you said that. Okay, so I'm looking at the stock, and I'm back on the snapshot. Again, it's got a Zacks rank of a number 1, so clearly something good is happening there. It's already gotten its haircut at the end of 2018, so that's nice to see. It looks like they just had a couple of positive surprises most recently, so that's also of benefit. But once again, I'm going to go back to the style scores. Value is C, fine enough, but I got an F on growth. I've got a D on momentum, and the weighted VGM score is F. So again, it's a great number 1.
But there's better other number
If
ones.
I had a choice between a number 1 and an A or a B, and a number 1 for a D or an F, the odds are in your favor to do the A and B. So I am not discounting this. It's still a candidate. I see it's in the top 43%. So again, you're within the top half. But you may be able to make a better decision. But still a good candidate.
All right.
So you're not blown out of the water, Danny.
No, I think those were 2 decent choices. I wasn't completely destroyed, but you know what? I might buy a little bit today. We'll see. I don't know. I'm kind of thinking about it.
Yeah. The one thing I look at too, though, I see that these guys are going to be reporting on August 8th. So it shows the earnings ESP is negative 13%. That would also give me pause. It'd be like, okay, do I want to get into a stock right before earnings and people are thinking they're going to blow it? Or do I
Right.
want to get in where there's a likelihood that they're actually going to positive surprise? Then I take a look at their projected EPS growth, minus 2%. Their projected EPS for the quarter, down 57%. So maybe some of that's already priced in, but once again...
Is that something you should wait for then? Because I know that is an actual investing kind of strategy. Some people actually wait for the earnings and they'll buy before, the actual call comes up to see if they can get in on that big spike that may happen with the earnings. Is that something that you would probably, as an investor, since I'm not really trading, I should probably wait until earnings to kind of see how the company reacts and kind of see if I can get in maybe even at a lower price point?
I mean, for me, again, going back to probabilities, I would not be too excited getting into a stock before they report with a 13% anticipated negative surprise, with a F1 negative projected growth rate of 2% and a Q1 negative growth rate of 57. I'd be waking up sweating bullets in trepidation, like, oh my God,
You're scaring me, Kevin.
I don't want to do that. I would rather be in something that looks better. So,
Okay.
Oh man, I got a feeling I'm gonna get blown out with mine, Danny.
I don't know.
After this conversation,
Now, by the way,
okay, so
if Calloway rockets higher, or if that other stock you mentioned rockets higher,
Right.
hey, sometimes your analysis, you're going to make choices. You're going to make a very, very logical decision that have all of the probabilities in your favor, and things can turn out differently. The stock that you decide statistically is not in your favor could skyrocket, and that's just the way it is.
Yeah, I mean, they're going to have a new product coming out or something
or
else,
the
right?
one that has all the probabilities in your favor is going to lose. Just know those things are going to happen, but over time, probabilities are probabilities for a reason. You want to invest with the probabilities.
Very true.
Oh,
Hit
boy.
me. Hit me,
Here,
Betsy.
here we go. Okay.
Betsy's turn. Let's go.
So I've got two stocks, just like Danny, but
Okay.
my two stocks are in, I wouldn't call them a similar industry, but they're related industries.
Okay.
I am very much following what's going on in the United States with legalization of marijuana. I feel
Okay.
like this is an industry that's just barely come out.
Okay.
So my first curveball to you is the ETF MJ.
MJ.
Yeah, it's
You know, it's funny you say that because I was literally on my phone looking for a. Oh no, that was a Bitcoin ETF. All right, yeah.
different thing.
Have they come out with
Right.
those now? I thought they were having a lot
I
of
don't know.
trouble.
I couldn't find one.
Yeah, I think the FCC is really kind of cutting hard on a lot of the regulations, and a lot of people are having troubles.
So,
Okay,
while he's
MJ.
looking here, MJ is a ETF, so it's made up of a lot of different stocks. If you want to take a look, you can go to etfmg.com, MJ, and it'll show you it's got a lot of different stuff in there. GW Pharmaceuticals, Tilray, Kronos, Aurora Group, Canopy Growth, Corbus Pharmaceuticals, Afria, Organigram Holdings, Green Organic DU, lots of stocks.
Wow.
But I kind of feel like this being the industry and currently the climate that's going on across the United States, I feel like this is a pretty solid choice.
Let me say this: we have a service called Marijuana Innovators, and look, there is a lot of excitement around marijuana stocks. I personally don't have any marijuana stocks yet, but I am thinking about getting into some marijuana stocks. But let me just say, when I finally do get into a marijuana stock, and there's plenty of people who are in them right now, obviously, but I look at this as a highly, highly speculative
Oh,
thing.
yeah.
I'm not putting this into an account anticipating it to, do well year after year. The idea is I'm hoping the legalization comes to fruition sooner rather than later. I hope these companies are able to generate a
federally
viable
operate,
business
right.
model. So it looks like this is where it's going to go. I don't know how long it's going to take for this money to actually generate a return. So I do consider this to be highly speculative. I will say, I don't know if that should be your very, very first pick, but it wouldn't be my first pick, but it doesn't necessarily mean it can't be yours. You're a young guy.
I just figured I was hedging my bet because I'm going with an ETF.
If all of the stocks, this is a very nascent industry.
Right.
So, if all of these stocks are going to be waiting decades, not decades, but let's say 5 or 10 years.
This is a call for Donald. If you can make this happen before you leave, there are a lot of stock investors that would really love you.
Look, let me say this. I don't want anybody to get the wrong impression that I am down on marijuana stocks. I totally am not down on marijuana stocks. I think this is an exciting industry. I think there's lots of very, very interesting avenues. I have not really put in the time to look at the marijuana stocks. Personally, for me, I would probably be more interested in the marijuana stocks that are going to be integrated in medical products and medicines. I think
Agreed.
that has some of the greatest promise. I don't know what the pot growers or the dispensaries are going to do.
Well, that's what I was going to say. Like this one, for example, Aurora Cannabis is actually a grower.
Okay.
So they're actually in the business of producing. So
Yeah. So let me just say, I think it's an interesting pick. I would just tell you, I would give you a word of caution. It is a highly speculative thing. Let me just see what the chart looks like. Let me go to the interactive chart.
yeah, give me your little 1-2 here. Because I'm looking at the chart and it looks like it's going down, which makes me think I got a chance to get in.
Yeah, there's no Zacks rank on it. I would have to look at the individual stocks. So what I would do, if there is no Zacks rank on the ETF rank, I would look at the individual stocks. We don't have time to do that in the show because there's so many stocks in here. But, for me, I'm not necessarily a momentum investor, but I do prefer seeing stocks not going straight down.
Right.
And if I am going to be buying stocks that have gone straight down, I want to make really, really sure that they are at fantastic fundamentals, valuations. I want to make sure that that they are growing by a specific amount. I want to have some kind of thing that I can hang my hat on, like, hey, I'm getting this at a bargain because there's a legit reason why it should go up. But seeing how it's been going down, I think to myself, oh my God, here we have a historic time in our economy. We have a historic time in the stock market, which is presenting historic opportunity for the investor.
Why would I get into
this is your chance to really make a lot of money within the next couple of years, in my opinion.
Right.
I always tell people, don't squander this historic time on preventable mistakes. This stock may go to infinity, but I'm not going to bet money that it will. I would much rather put my money in something that may have a higher probability of success given the historic nature of the environment we're in.
Well, you called me out. It was going to be my momentum pick. I was just betting on the industry. I saw it going down.
Well,
this might be a chance.
This momentum is down.
It is very down. But that's what
at least price-wise.
I'm hoping that it's near a bottom, and I'm hoping to get in. So it sounds to me like I'm probably not going to add that one. But that was my
maybe
curve
revisit,
ball.
In a little bit.
Well, there's been a lower bottom in 2000, and what is that? Is that late 2018 or early 2019? I can't see. Looks like at the end of 2018, it was significantly lower. So is that like what, $30 now? It got as low as $22.
I don't think it can go much lower, but that's just me. That was my momentum bet. So
says that
yeah,
every single guy who's blown out their account. I don't think it's going much lower from here.
I'm not disagreeing with you.
Then the question is, did you think it was going to get this low when you first bought it? No.
Well, I was figuring, my personal thought, it was a momentum try I wanted to get into, and I thought, well, at $30, it's not so much risk.
Well, there's $30 worth of risk.
$30 worth of risk. If I put a couple shares in,
all of it.
Well, I mean, if I put a couple shares in, I'm only out of $60, $70.
But again, remember, so if that is how you're going to treat a speculative pick, fine. But remember, at the top of this this convo, we were talking about trying to create a smart, equal dollar-weighted portfolio.
Good diversity.
So if you're just looking at this, I'm going to throw a couple of bucks at it. Maybe these couple of $100 will turn into a couple of thousand in time. Fine. But if you're looking to flesh out an equal dollar-weighted portfolio, still think there are some better bets.
Yeah. All right. Good. Fair.
Okay.
You actually hit it right on the head.
Give me your last one, Betsy.
All right. In the related industry, I thought Take-Two Interactive.
Okay.
That is TTWO. It is a video game company.
TTWO?
TTWO. Known for their recently famous Red Dead Redemption 2.
Great game, by the way.
I don't know what you're talking about.
They had their GTA 5, Grand Theft Auto 5 that came out, which was another huge hit and continues to still destroy sales.
Are you just trying to make me feel old? Is that what you're doing?
No. I'm looking at things that I think that have more momentum and could potentially go up, because I feel like this stock especially has just been on fire.
It sounds like you're doing the buy what you know thing, kind of like what I did.
To an extent, I just got to feel like a lot of these industries are now getting popular, especially with the younger kids and the millennials. I mean, it used to be just kids that played video games.
Right.
Well, now they've got doctors training on video games.
Yeah.
I mean, I got a guy who just went to the military, a friend of mine, who's going to be one of those bomb engineers.
Right.
He told me he has a Xbox controller to control his robot.
Oh, sure. I mean, shooting zombies in your home is different.
Right, I agree. But I'm just saying, we've now taken standard technology that used to be for video games, and we're using it to disable bombs.
Sure.
Like, that's kind of crazy. So when it comes to video games, I feel like video games, especially, I can't remember who makes Fortnite, but I mean, their stock blew up.
Yeah,
and they took a bunch of other stocks with them.
Yeah, that's owned by Epic, but they're a private company, but there's a 10-cent holding, I think, of 40% of the company. So if you are looking for that, I know that.
Yeah. No, I wasn't looking for that one specifically, because I am also a fan of this company. I feel like their games just destroy. I mean, every time, I think that Grand Theft Auto, when it came out, was the most successful piece of media to ever come out. Sold more than any book, any record, any other video game, any movie.
Wow.
Oh yeah, these things are huge releases. I mean, years ago I became familiar with it. I mean, they've been around forever, but I never really paid attention to it because I'm not a gamer. But I know how popular everything is, and yeah, you release these things, and they're bigger than some of the biggest blockbuster movies out there. So this is big, big big business.
Right.
So once again, you're in an area that that I don't really follow that much. So I would look at all of the Zacks rank and all of the other stuff. So first thing I see is there is Zacks rank 3. I would prefer you look at a 1 or a 2.
Ouch.
I see there's a style score. It's a C. That's middle of the road. Value is F. Not surprised since this is a growth and momentum pick. But again, you could probably do better. The good thing, though, is that it is in the top 12% of Zacks ranked industries. You were just saying, Danny, or excuse me, Jack Sparrow. That, you were just saying that that you're buying what you know.
Right.
I am a big fan of buying what you know, but I wouldn't want my bias of buying what you know to go against
and lead you down kind of the wrong
Well,
way.
that's that falling in love with a stock idea.
So
yeah.
you know this, but kudos for at least making sure that they are in a top-rated industry. So I have a personal bias right now. I really like retail. I know retail is like, of all the 16 or 17 different sectors we have, I think they're ranked number 4. So I like the fact that my proclivities, my bias in retail is in alignment with the other facts that make it a good pick. If your bias, though, leads you down the road where they're in a poorly performing industry or they have a poor Zacks rank or the fundamentals look terrible, you can still have your bias, just don't put any money on the line because of it. But anyways, so I'm looking at Take-Two. They've got an interesting EPS growth rate for the long term, but once again, they're going to be, now this is early, they're going to be releasing earnings on August 5th, and the ESP could change, right? I think the ESP is most potent within 5 to 7 days. Really, the closer you get to earnings, the better, the more potent and inaccurate it is. But right now, it is showing an earnings ESP of minus 54%. So the people in the know, based on earnings estimates and earnings estimate revisions, are suggesting that this is a company that's going to disappoint. So, that's a little negative. So
I was looking at the chart and I was like, man, that looks like it could be a breakout. And with the consensus estimate, it looked like 2021 at least. They're
Let's take a look.
Going up. I agree that they're going down for 2020. But.
Yeah. So this is interesting. I mean, I see that they did make a nice move and then they collapsed in 2018, like the market did. They've rebounded a nice bit. But when I take a look, if you're on my computer. I take a look at 2019. You see where my cursor is, Danny?
Yeah.
So I see that this has been going down. Then I take a look at 2020. Granted, in absolute numbers, it's higher, but that has been going down quite precipitously. I do see 2021 is actually, there's just a little bit of data there. In absolute terms, it's higher, and it's starting to go up. But again, a lot can happen between now and the next 2 years. And who knows what's going to happen once they report come August. So again, these are other things that I say, hey, maybe this is okay. But again, with 10,000 stocks out there, am I really stacking all of the odds in my favor with this pick? I don't know if all of the odds are in my favor. So again, I'm not discounting it. I personally wouldn't do it for myself.
Right.
But again, if anything somebody should take away from today's conversation is, how do I put the odds of success in my favor and try to get as many things lined up so you have a great chance of succeeding, especially on your first trade.
Yeah, and in such a risky kind of environment, I mean, stock trading in general can be risky in and of itself. So I think just hearing this risk aversion and kind of these small little steps you take and how you look at a stock was great insight to kind of seeing how we should be looking at the stocks, because we were looking at very basic things and we looked at, kind of what we knew and what companies we knew. We looked at the Zacks ranked number ones, but you dove a little bit deeper and kind of showed, there's more to it than just...
I think one of the things you can do, did I pull it up here? Yeah. So on Zacks.com, I'm going to stocks, then I'm going to Zacks sector rank, so it's already loaded. And when I was telling you that I have my bias with retail and wholesale, I can see that conglomerates. This is the top sector rank. Then I've got medical. That's number 2, the second best sector. Then construction, the third best sector. Retail and wholesale, the fourth best. I believe your Take-Two would probably be in this, I'm assuming.
Probably.
Because Take-Two, do they make the games or are they just
No, yeah,
sell
the
them?
developers. Yeah, no,
Okay.
the developers.
But either way, so here it's like, okay, I now see what the top sectors are. Then, for example, if I were to click on retail and wholesale, now I can see there's 224 companies within the retail wholesale sector. Then it breaks it down to all of the industries within that sector. And then if I wanted to, I could click within those industries and it will take me to a page that will show me all of the stocks within those industries. So one of the ways that you may want to start off is take a look at it's top-down investing. Take a look at what the top groups are. Then focus in on the top industries within those top sectors, and then try to find the best stocks within those industries. This way you are stacking the probabilities of success in your favor. By the way, I do want to say one thing about the Take-Two, because it looks like you had 2 highly speculative
Very
picks.
speculative, for sure. That was on purpose, too,
Look,
for sure.
if we're talking about identifying what kind of trader you are, maybe you identify yourself as, hey, look, here's some money. I'm totally willing to lose it, but I'm hoping to make maybe a home run on it. And what's the goal for my investing at this point? I'm just looking to have some fun and see what happens. If that's the case,
Right.
do it.
Yeah.
But if you have a different outlook, where it's like, I would like to preserve this capital if I could, I'd like to see some steady gains. Maybe you don't want to do something highly speculative. But again, this is know yourself.
Right.
If you're like, man, I got $5,000 burning a hole in my pocket, and I'm
do
going to
it,
put
right.
this money on red because if this hits, I'm going to make a fortune.
Right.
You know, it's funny when I get in or out of a stock. One of the games I will play with myself, especially if I'm pulling profits or something, or if I'm cutting a loss, I will think to myself, if I want to get out of something, and I think, if I am still in and this thing goes down, how will I feel? Then I think, let's say I want to get out. If I get out and it goes up, how will I feel? If I would be more angry at being in and the stock going down while I'm still in it, then I know that I need to get out.
Right.
So it's like, where am I going to experience the greatest amount of regret?
Yeah.
Seriously, the pain. So if you're thinking, man, I really think
I don't want to lose that $1,000.
but for you,
Right.
I really think the stock is going to explode.
Right.
And if it explodes and you're not in it, if you're like, I can't
Dang it.
believe I missed it. But on the same token, if you're like, I think this thing's going to go up, and this thing just implodes on you, craters, and you lose half of your investment, if you're like, that's okay, I really thought this thing was going to hit, then make the trade. It's all where your mindset is and what your risk tolerance is.
Well, right now, seeing as we're trading with paper, my risk is beating Danny over there. So if I can, I'm
is
not
gonna be interesting.
Yeah, I'm probably not going
Right.
to take either of these stocks given our conversation.
So here's the thing then. Jack Sparrow had 2, and you had 2 stocks.
People are going to start calling me Jack Sparrow.
Yes,
It's
that would be
really
great.
not going to be cool.
So, yeah, but the best part is going to be Eric being called Betsy, especially with that beard. One of the ugliest women you'll ever see.
This is 2019,
Right, oh,
sir.
fair
This
enough.
is 2019.
So you guys both have your picks.
Yep.
Right.
Are you going to pick one of these, or are you going to go back to the drawing board and look for something else? What are you going to
Well,
do?
that's actually where our conversation now goes, because we went through our stocks. I mean,
Okay.
me personally, we never said, and I don't know if we could do this, but Danny, we make the decision now, but I don't know if I could take Danny's stocks if I wanted, or he could take mine. I mean, we had talked about him. I kind of feel since we both talked about him, it should be open.
Yeah, you know what? I don't feel very comfortable with your stocks. I'm not gonna lie.
Yeah, neither do I. I mean,
but-
after hearing that,
But with mine, I feel like I'm gonna do a little reevaluating and take a look at it. And on the next show, I'm gonna make a decision whether I want to make a purchase, because I feel like they weren't the worst starting points.
I feel like
the
Square was a good choice.
Yeah, Calloway, I think I'm going to fray away from just because of the earnings and kind of how we discussed on the upside not being there. Square seems like it has a little bit of growth, a tiny bit of room to run, but I think I'm going to take a little bit deeper look into it after Kevin's discussion about it and kind of go from there.
First off, the mere fact that they have good Zacks ranks makes them a viable candidate. But again, the takeaway is put probabilities in your favor. So try to get as many as possible. By the way, we didn't really talk about it yet, but I know there's going to be people who are thinking, should I get in now with the market at new highs?
Right.
I would say, yes, now is the time to get in. That doesn't mean it won't go down a little bit and you'll see some profit taking or some backfilling, but statistics show that stocks making new highs have a tendency of making even higher highs.
Yep.
And statistics also show that when you see stocks making highs, usually those stocks move higher within the subsequent 6 months. So there's no higher chance of seeing a stock go down just because it's made new highs. On the contrary, there's actually a higher chance of seeing the stocks move higher still. So if you believe that this is a historic opportunity, try to get money into the market sooner rather than later. And don't be besieged with analysis paralysis. So while you're looking to try to make a good decision, don't worry that it has to be the best decision. Making a good decision is good enough, but just feel good about what you're doing. So
Well, I feel like that's a good place to leave that on. That was a good last nugget of knowledge. You got anything else you'd like to add? Because I know we're going to be seeing you again soon to do the options show. So.
yeah, I'm just curious to know which ones you guys are going to pick. So
Oh, you'll have to keep watching.
Yeah, all
It doesn't
right.
sound like either of us are going to be
just-
adding one
We're
today.
going to get out of here, and I'm going to go to your office, and I'm going to tell you which one are you doing. I want to know. I want to know.
Danny, you got anything else?
No, you know what? I think we're just going to have to reevaluate. I think we got a lot of great information today. Yeah, so I think just reevaluating at least from my opinion and where I stand, I think reevaluating and kind of taking it back, on Wednesday and see kind of where it goes from there. I might even buy Square, maybe a small allocation. I don't think I'd do a big one just because there is a lot of risk there. It being a growth, there's not, very good style scores there for it being value or anything like that. So I think Square
good
might
Zach's
be
rank.
on the docket. Yeah, and it
Looks
was a
like a
great
good stock.
exact rank, so.
All right. Well, Kevin, thanks for being our first guest here on
Yeah,
Paper
buddy.
Traders. Danny and I will be back here every Monday and Wednesday for eternity. or until we get
Hat and all.
or until we get super rich on our picks that we make here. Danny, do you happen to own any of the stocks we've talked about?
I personally do not. No, I don't.
Kevin, you own any of the stocks we talked about?
None of those.
Okay, neither do I. Do not own any of the stocks we talked about. Welcome and thank you all to coming to our show and checking us out. Please check out any more of our stuff and all our other media on zax.com/YouTube. Please subscribe to our podcast on Apple Podcasts and Spotify. And please also be sure to check out Zach's Options Trader, which is Kevin's service, which you can get at zax.com. And we will see you all on Wednesday.
Later.